Good morning, YouTube. It's JL here with Kambio for the people, where we build a fully automated AI-based stock options trading system. Every day we place trades with our AI agent CARA, then debrief the session with Claude. Me and two AIs, super raw and in the open for all of you to see. Nothing discussed is financial advice and is for educational and entertainment purposes only. Let's dive into the daily summary. Okay, so today is June 26th. It's about 7:30 in the morning. Market opens 9:30 Eastern, so we send this summary out at 9:40. So that's 6:40 here in Arizona. So looks like we've got a pretty good day of actions. We just got this BKR thing that we even took a look at it yesterday and addressed it. I think we're still looking at this 84 because the next earnings is July. I think it was 14th or something like that. So the system's still thinking that it needs to look out for those events, but it actually doesn't. So nothing really to do here. I'm gonna have to discuss this again with Claude and just see if why we're still getting that in our events coming up. But other than that, the day's looking pretty well. Like look at our open trades that are in our Theta Core. Again, the Theta Core is where the Theta benefit really is very, very high. So you got this ramp up area when you're over 30 days. We've got this BKR in there, which is, this is not accurate either. And then, because that's an older trade, just to be, you know. And then, so our Theta Core right here is 14 to 30, actually 30 to 14 days. It should be the opposite. So you can see these trades have been held for 22 days. So that's the Schwab covered call. So CC means covered call. And then, you know, that's looking pretty good. This is just a covered call on top of these physical shares that we're holding. So we got assigned these. So now we're just basically trying to make as much money on top of it until it gets called away. So we got assigned at 89, and then I think we're at, oh, it's actually dropping. So let's see, where are we at now? Schwab. Oh, we're still at 88. So it, you know, we might lose a little bit on that, but we're going to keep making money on top of it with the covered calls. So we'll keep it at a pretty high level. So our covered call will always be above the 89. So then when it does actually get called away, then we actually make a small profit on the actual what is it, intrinsic value. I'm not sure intrinsic or extrinsic, but one of those. So we'll make a couple bucks maybe, you know, per share, and then we'll make all the money on the covered calls as much as many as we can play successfully. So, and then the rest of the, you know, so this one's looking at 16 days, the target. So this is a bull put spread because it used to be a condor, and then we flat exited I think the call side. So we're looking at about 517 as a P&L on that one. So that's looking pretty decent, even though we exited one side. So that's what's nice about flat exits. You still have the other side's premium, which is, you know, for the most part safe. So we've got our put down here, and, you know, we've got the stock going, changing directionally. So we've got this kind of channel right here. It was going flat, and then all of a sudden it wanted to take off in a directional manner. So, but we've still got our put down here. So yeah, so that's going to make us, you know, a little bit, about 500 bucks. So 16 days, we should be looking to get rid of that here pretty soon. Actually, I don't think we have logic for that yet because, yeah, that's actually something I need to talk to Claude about too. So target right now, we only want to hold for like probably 14-ish days. So, but I think the system right now, it's looking for half profit. So it's trying to wait for this to get to 1100. Because we did the flat exit, I don't think we're going to get to 1100. So we might have to add a rule that says, hey, if we're past 14 days, look at the situation. If it's a flat exit, then we're going to have to use a different rule. So this one's probably ready to exit actually. And then we can lock in that 517 in the P&L. So that's pretty nice. ETN is actually looking pretty good. 11-day hold, and we're already at 1100. So the system's going to be looking for this to get to 3000-ish. So let me see, like, if we have any danger signs. This thing is looking pretty flat, like nice little channel here. Bollinger Bands, you know, that's the shape we want. Those Bollinger Bands just like straight across. Let's see, we've got our 90 and our 30 pretty much agree. Our 300's below, but it also is kind of like horizontal. This screen is a little bit smaller, so I can't actually see like that much detail. So a tiny bit of an uptrend, so that means we're on a crest. So we would expect this 90 to cross over the 300, but I mean look how like shallow that slope is. So it's going to take months for it to cross over. So that's actually a really good sign for us. 49 on the RSI, and this thing likes to kind of stay. So that's what, 68. That's like 29. So that's pretty low actually. So, but I usually like to get a range of RSI, just see where kind of stocks like to be on the RSI, but you know, we want them to be in the middle. So anything, you know, the tendency is for them to come back to the middle. So we've got our MACDs is converging, so that means it's going to cross over here and basically oscillate just like this. So nice oscillation, histogram's nice and low, nice and small. You don't want to see these big ones. The big ones are like, you know, big moves. So see how it jumped up here and jumped back down. So those big moves. HV is a little concerning actually. It's getting a little higher, so that tells me, oh yeah, see these jumps. You can see that like gap down plus a big run down, and then a cross here, and then a gap up again. So I think we're starting to break the consensus. So we might want to look at this one soon. I like to see how these all connect pretty well. I mean, we've got these little, you know, a couple big candles in here. You know, decently normal. It's just, you know, you don't want to see huge jumps, and like that just means that, you know, the market doesn't agree. So something happened here, right? So somebody's like, okay, overnight, you know, boom, it bumped up. But, you know, overall, we still got this nice Bollinger Bands, you know, horizontal channel. So that's what we look for. And then, yeah, since we don't have that many actions today, we're going to spend a little bit more time checking out these, the Theta Core cohort. So just kind of see where things are at, look at everything smooth. Yeah, these are looking really nice. So pretty nice oscillation. Just, I mean, you can see the MAs are like super in line. Look at this. Bollinger Bands are compressing like big time over here. That means it's super flat. Look at that. MACD is like almost a straight line. Yeah, 48 on the RSI looks like. So yeah, like right in the middle. We've got this HV pointing downwards. That means we're calming. So all of this basically says, yeah, we're pretty much going to be flat for another, you know, another little bit. We only have to be right for 14 days. So that's the idea. So, and we've been holding this for 10. So I feel like, I'm not sure why we're not capturing as much profit as I would expect this to be a little bit closer to 1,000 already, but we'll see. So target is always 50% of premium. So this is the premium that we capture in the beginning of the trade, and this is like if we go to it says, oh, expected. So this is EV, expected value. It should be EV there. So right now, if we were to exit right now, then we could expect a $477 profit on this one. So the premium, it kind of counts, but not really. So we're basically collecting premium, and then whatever our exit comes out of that premium. So if we exit for more than that premium, then we come negative, obviously. But yeah, if we exit for let's say $1,000 on this one, then we made 1840. So so CEG. I think this one is actually a full condor. It is, yeah. So full condor. Looking pretty good. I think it's dropping a little bit, to be honest. So you got this gap down right here, and then we've got a straight line over here. Let me see. I think this one's new. So 8 days. So what is that? 1, 2, 3, 4, 5, 6, 7, 8. So we're about here. So we entered here. So actually, this is our regime right here. So actually, that's pretty good because we're starting to get some compression right here in the Bollinger Bands. Where's the 90, 300? We're still well below, but they are pointing in the same direction. Okay, so we got the 90 crossing the 300 right here. So that tells me upward. So we're gonna be flat and then upward. So that's kind of good. Let me see where our CEG. So we're at 310. Okay, so we're kind of like we're at the 300. So even if even if we did come upward and then, you know, we have that 300 protection, plus we've got quite a bit of resistance here in this area. So psychological pricing is like, you know, for this stock, like people have seen this stock at this price before, the 310, 320, what is that, yeah. So between 310 and 320, that kind of band, or bin, I mean. So that creates some sort of psychological, oh, this is expensive or this is not expensive, you know. So hopefully that gives us a little bit of protection. But we're pretty far away from that. We're at 260, so I mean, I'm not super worried about the call side. Let's see, 250 on the put side. That's like right here. I mean, a little closer than I'd like to be, but I still think we're on an upward trend. So, you know, something to watch for. MACD's below. We've got histogram coming down, so that does say we've got the fast crossing over the slow on a downward. So that does say that we might come down a little bit before we go back up. Let's see, RSI is a little on the low, you know, not crazy, but this is showing a lot of calming. So, you know, the HV is like on this pretty big slope here. That's actually pretty good for us. One thing is that it's kind of on the low side historically. So you can see that it kind of touches the bottoms of these guys. So that makes me think that we are getting ready to come back up, you know. So the MAs show me that we're going to come up. The HV is showing me that we're going to come up. Being that the MACD is underneath the zero line, that does say that we're going to come up eventually, because, like, you know, we are crossing over to go back down, but then, you know, I'm expecting another upswing here back towards the center. So it's just like this basically. So we're going to cross and then we're going to come back up like that. So something like that. The market is unpredictable, but that's kind of like my read on the chart. I'd love to hear you guys' reads too. If I'm, you know, definitely not a science, definitely kind of a feel type of thing, right? So, you know, lo and behold, I think, you know, at the end of the day, I think we're good with CEG for now. We got 8 days, so we probably got to be hoping that we, you know, the theta gives us good traction here in the next 6 days. So we'll see what happens. BKNG, this is a bull put. I don't think we placed it as a bull put. I think we did a flat exit, like I want to say 2 days ago or something like that. So that's why the credit's so low. So this is another one that's going to have to be exited with the new logic. We're gonna have to add new logic on this one. So BKNG. But the nice thing is that, see, let's see what side. Our call side was in danger, right? Yeah, so we have a put right now. So our call side was in danger and we're still profitable. That's actually pretty important. That means we're able to remediate early enough to mitigate a big loss, you know, especially not max loss. We don't want max loss at all. If we're hitting max losses, that's really not good. We're not going to win at the end of the day. Long run, you just can't do that. Like if you're hitting max losses all the time, it's going to eat up whatever profit you want on any other trades. So we're at, you know, $39. That's respectable for, you know, a trade that was in danger. So I think that put side's going to do okay. So what that means is we're going to basically run out this 780. Hopefully the puts expire worthless and we capture a lot of that premium. We do got another 10 days. So we're probably going to be okay. We'll see. Vive, this is the one that we placed a couple days ago. Let's see if our hypothesis is holding. Yeah, I mean, this one is super flat. This one, I'm just a little bit concerned about the liquidity, but let's see. Close here. Not terrible, but not great either, you know. So, I mean, it is moving. So people are trading it. That's good. So we're still at 0.24 delta, 0.17. So we're great actually on the put side. You know, it's climbing a little bit on the call side. So we just got to, I think we're looking for it to be if it's over in the threes, in the, you know, in point, like 0.3 and above, I think then we start getting concerned. See how it just gets higher as we get to this this current price, the spot price. So we don't want that. Like you can see how the option prices get higher and higher and higher. So that means we won't be able to capture as much premium if we do have to exit this. So that's we want prices that are lower, obviously lower than our initial premium take. So I don't know what we bought this for, but so 16. So we bought for $1.64. Let's just see. Let's just see if we. So $1.50. So we'd make 14 cents, which is not great. I mean, but that's 4 days old. So you know, I'm just trying to show, you know, how the premium decreases over time, and then that's how we basically capture as much of that premium as possible. Like we lock it in, you know. So and then UPS is what we placed yesterday. So we're actually negative. And these are actually making sense. So what did we say? 14 cents or $14? So they have us at 47 bucks P&L. I think that's right. I don't know. I'm not doing math right now. What did I say? UPS. We got a cross here. That's for today. We had a little run up yesterday. Wow, we got like pretty much MAs are, I know the screen is super small, but MAs are pretty much all in line. Where's the 300? 300 is way down here, so I would expect downward pressure. MACD's above the line, so you know eventually we're going to head back towards that. Very short histogram, so that's nice. That means just pretty calm. HV is calming, which is nice. Where are we at? 55. So yeah, so that points a little bit downward as well, so slight downward. I feel like we're going to be okay on this. We'll see. You know, I was a little bit iffy on this one, but I think it might turn out actually. So we'll see. Very low premium on these last two, which is not a bad thing actually, because especially for like smaller accounts, like ultimately the goal is for people to be able to add their accounts to this. You know, I'm not licensed or anything like that, so but eventually once I am working on my licenses right now, so once we can actually trade on other people's behalfs through a brokerage, that's a Series 65, so I'm working on that. Then we'll be able to say people can add their accounts to this system and they'll basically make the money. We'll place the same exact trades on everybody's accounts, so that's going to be that's what we're basically heading towards. Let's see. So I think we're looking pretty good. CARA we already talked about. We've got those Schwab shares holding. So our P&L, we must have lost a little bit yesterday. That's okay. We're looking for this to jump up to 80% range, which you can see that these losses are. Oh, okay. Interesting. So it's registering a loss on the flat exits, but we're actually still positive. See, like BK&G, we're actually positive, but it's still registering a loss. So that's actually not accurate. Yeah, so we'll have to fix that because it's only considering one side. So AMT, we had a full close at 712. We did lose on that one. So yeah, so we're gonna fix that, and we're gonna, you know, hopefully you can see that these are all lit up green, so that's awesome. You know, before we used to be all reds like this, so like you know, more than half of these would be reds because we just didn't have, number one, we didn't have the mitigation strategy in place. So mitigation probably went into place maybe, I'm gonna say 2 weeks ago, maybe last week, something like that. So you can see the system is growing and evolving over time. Originally it was just you placed a trade and you just let it go because we had no strategy to like the system didn't have a strategy to mitigate or remediate any trades that are deviating. So it was just here, place the trade and then let it go. So that we were getting the selection model was the primary objective. Like how do we get these from the 2,800 stocks, how do we get down to one best trade per day, right? So that selection model, those are the steps that we kind of went over yesterday with, yeah, so these guys, these guys right here. So how do we get our selection model so that we're able to get down to a trade. And then we added the daily summary. We didn't even have this daily summary before, so we added this so that we can kind of see what's going on. We can see P&L, across the board. We can see what trades are kind of like, and at first we didn't even show this type of warning, like is it good or do we need to remediate? We didn't have this action section either, so we added that. So just a lot of work over the past, I don't know, this is like maybe a couple, less than 2 months old, maybe a month and a half or so. So yeah, anyways, we're looking pretty decent, as good as I can expect in a month. So that's pretty okay. So we're basically teaching the system how to make these trades and how to remediate the trades and how to get this P&L up. And we're using, Claude's good at finding like quant models that we can use, right? So I don't even understand them fully. So we have HMM in place. We have this other one called ADX in place, and we have the Black-Scholes is in place. So yeah, so these are all models that are used throughout the industry and the quant trading industry. So we're trying to integrate as much of those as possible to give us as much information and allow us to make the best choices possible to say, out of all these stocks, like this is the best one to trade, and then out of depending on what happens with that, this is the best move that you should take. So that's what we're doing. Let's see. So I think that's it for the daily summary. We look pretty decent today, actually. So things to go over with Claude is the BKR. Why is this still showing up? The event risk is inaccurate because it's still thinking we're at 84. We need to look at remediate or exit strategy for the ones that have flat exits already. And then we need to look at, I'm not sure what else. Actual P&Ls on this, see if this is accurate. Yeah, so I think those are a couple good things to look at for today. And then, yeah, so now we'll move on to our daily trade. Let's go to TOS, grab our scan. And again, for those who aren't familiar, this is just basically a filtration on Thinkorswim, and they have access to basically all the tickers. So we only have like 2,800 or so in our database. So every time that we use this as sort of a source for sourcing new tickers. If they're pulling it up on their results, then we should have it in our database. So we use it as, okay, what do they have, and then let's add it to ours. Okay, so let's go all the way down here. So I always start with that. Can't type today. Oh well, should still get it. Haiku's pretty good at like misspellings and stuff. So she's going to save that. She's going to parse it. She's going to see that there's 3 different ones. She's going to check our universe and see if they're already in there. And, most likely they are. If not, she'll add it. And then, so we got 29 that are sideways out of our entire database. And then we removed 4 of the active ones. So that's good. Actually, when you see a lot of like active trades, like active overlap, that means our hypothesis is actually working. So they're still sideways. So the trades that we have are still sideways, and that's a good thing. Let's see. So out of those, the 28, so this is kind of a summary of the different funnel levels. And it explains how we get to this 28 and then now 26. So yeah, so that's, wow, it's a lot of options today, which is cool. So you can see that, out of those, the CRA failed because of the HV30. So there's different rules in there. There's a bunch of rules actually. And we got this HV slope, which I don't even think we need this step anymore because we're already including it in here. So and then, so now we're going to do event check on all of those. Only 23 cleared. We've got, a couple that have X dates. So a lot of people would like to buy into a stock right before the X date so that they can get the dividend and then sell it again after the dividend. So we tend to get a lot of activity. You'll see a bump up in uh, uh, in in buys, right? So we definitely want to trade around those, or like, you know, avoid those dates, because we don't want that volatility is a killer for condors. Condors, you just want to stay sideways. So, and then we go into this chart analysis phase. I have to kind of dig a little bit deeper into this because we have a scoring mechanism, but it has to do with like a volume profile. We created this like value area, so it shows like it basically attempts to find where the channel is, and then it says, like, you know, it gives a rating of how centered it is. There's like a bunch of different scoring. I have to go through each little thing and try to maybe I'll try to get a list of, okay, here's each criteria and here's how we score it, and that way we can kind of like go over that. That would be kind of cool. We got a lot of strong ones today, so that's 5. Wow, good day for condors. Some moderates, neutral momentum, price centered, compressing, non-trending. Yeah, so these are, I mean, we've traded ARC I think a couple times now, and it's been good for us. So yeah, see, that's a nice little channel right there. So that's what we want to see almost every time. And it's new. So, you know, a lot of times you'll see these channels that have been in place for, you know, 3 months. So the probability of it breaking that that consensus is higher. So, you know, if we're getting into the channel early, then that's kind of, you know, usually a good thing. So you can see this MACD is good, the RSI is good, it's calming on the HV. This is like pretty nice one. We've got, let's see, that blue. I need to change that blue because I can barely see it. We've got the 90 days coming down here, so that shows like a little bit of a valley. It's underneath. Oh, so it's like a bounce off of the 300. 300's here. It's kind of on the, yeah. So that's also showing a valley. So we're gonna get a crossover right now on the 300 and the 90. 30's oscillating. I'm assuming it's gonna dip down and then come back up to match that upward trend. So we got to be careful, but the slope is very, very shallow. So see, like it took a couple months for the 90 to bottom out. So I would imagine the uptrend is also kind of maybe a couple months. So we're, you know, that tells me we're kind of safe on this unless something crazy happens, you know. So ARC, yeah, so these are some really good ones. ADP, I'm not gonna look at all these, but just like a couple for as an example, a couple of the stronger ones. So yeah, that one's pretty good. I mean, this still has a little curve in it. I kind of want them to be even more flat than this. But, you know, it's still, you know, MACD's in the middle here, you know, histogram's shortening, you know, RSI in the middle. We've got this slope here on the HV. So those are the factors that it really looks at. Bollinger Bands are compressing, pretty steady, two standard deviations on the Bollinger Band. So that's, you know, really compressed here. And then you got a widening because of this little gap up. So you got that HV gap right there. So anytime I see a gap like that, that's like a change in consensus. So we had this kind of like price channel here, and then we jumped up, and then we found consensus again. So that's how I see it. But yeah, I mean, that's a pretty decent one. I like the ARC one better for sure. I thought we already have an Uber trade. Let's see. Oh, did we get rid of that? Uber. Oh, we closed it. Yeah, we won a little bit on that one, so that's nice. That was an early exit, so to basically remediate. So that's actually a good example of something that was going bad, and we still salvaged it and made some money off of it. So that's good. Yeah, that's actually pretty decent. So see how you have this long one right here? You've got, that's a maybe 2-ish, little more than 2 months on this straight piece. And then, like I said, like probability of that breaking is, you know, gets higher as it gets longer. So sure enough, we break down, right? So that's what was about to hit us, this breakdown in here, or the downturn. And then now we've got another channel forming here. So it's like one step lower. So it's like here and then down. So You did have this big run up right here, which I'm not sure what that was. Maybe there was an event or something that happened. So, I mean, sometimes the market is just like, you know what, oh, everybody at the same time is like, oh, I should just invest in Uber, you know, who knows? Or maybe, you know, it gets added to an exchange of sort or a mutual fund of sort, you know, something like that. So, so many things can happen. We've got this, that's an interesting one because what do they call this? Encapsulation or something like that. So it's like a pole, flagpole, and then uh, gosh, that's the wrong term. It's like engulfment or something. I don't know. I can't remember. But whenever you see this kind of thing, we're reestablishing consensus here because like it's like not sure. It's like people think it's like here, but then they're like, okay, I agree. Okay, I agree. I agree. You know. Yeah. So, anyways, some good options. So it looks like a pretty good day for condors today. So where were we? Events cleared, and then we're here. We have these guys, quite a few options. And then, so now we take those 11 and we look at the options chains specifically and see if there's any good trades available. So we got 1, 2, 3, 4, 5, 6, 7, 8 that actually passed, which is nice. Wow. And a couple rejects. And the rejects are usually like liquidity issues. You know, we have to have enough liquidity to get into the trade and then also get out of the trade. So like that happened before on this one, Flute actually. So we bought in, was it that one? I don't know. I think it was GDX actually. So GDX, we bought in. There was enough liquidity for the open trade, but we tried to exit that trade like 4 different times and it didn't work out. I mean, it just wouldn't fill. Plus, I didn't have the fill management strategy in place yet, so that's one thing. But then GDX ended up. I guess we did win on that one, but it was super close. I remember that night because it went to expiration, and it was right on the call side. So we were thinking we were gonna have to we were gonna get called away, which means we would have negative shares on margin, which is not. That's probably like the worst. Yeah, see, it expired. That's probably the worst outcome we could we could get because if you have negative shares on margin, that means you basically owe that money back to the exchange. I think we can do cash covered puts on that underneath, and then when it gets assigned, then those negative shares go away, but I'm not certain about that. So I'm gonna actually do some research and see if that's actually a valid strategy. So, you know, bottom line is that's why we don't go to expiration because we don't want to be getting assigned or called away or anything like that. Obviously, we want to get called away on the physical shares, but you know, on options specifically on these condor trades, we don't want to get assigned or called away. So we want to exit, you know, 50% target or remediation or you know after 14-day DTE. So let's see. Back to here. So we've got some pretty decent trades. After the video, I'm going to go through and check these to make sure that they're accurate because yeah, we don't really know thin volume. So these thin volumes are probably out. Uber is looking good. So POP is probability of profit. So, and that's based on the deltas. So this means that we're, you know, as close to 0.2 deltas as possible. So 16, so that means 31%. So that means we're probably actually under 2. That's a good situation to be in. 20-day. Yeah, we're still on these 20 days, which is not my favorite time. The options chains are set to, I think it's the third week of each month, third weekend of each month, something like that. So you tend to see like, because we trade every day instead of like all in bulk, and we want to do 20 trades. So we want to do one trade per day. So it equals about 20, you know, 20 trade days per month. And that way we can break up the budget in 5% chunks, right? But what happens is because the DTEs are all the same expiration, you end up you know, your trades start at 30, let's say 30 days DTE, and then by the end of the week, you're already at like, you're only seeing like 23-day DTEs, which is not my favorite, but it's okay. It just means that we got to let go of them faster, you know? So then we got rejects here. So this is a new quality flow that we just added. That's interesting. Super cool. We added this last night, actually. Eligible to place. So only one. I don't know what that means. So we're gonna have to work on this output and like to see what it actually is saying. I think this HON is the one that got rejected. Yeah, I think HON, it says it clears the quality flow 1.5 eligible to place. Okay, I'm not sure what that's trying to say. New functionality, so we're gonna have to work on it. Deep search, HON, so we got one material, so flute, yeah, high risk, low event risk. Routine Uber Eats retail expansion. Okay, so, business as usual, kind of, so that's pretty good. Everything else is nothing. Like this description for like no events is like way too long. So we need to work on that and be like, nope, no events. Macro sector level risks, aerospace defense. Oh, that's one thing too, because we have event check for global events, like market wide. So like, Fed interest rate meeting, updates or whatever. We've got, stuff like that. That's at a global level. And then we've got a stock level event check where it's like, is there, earnings calls coming up? Is there X dates, stuff like that. But we don't have sector event yet. So like right now, oil industry, I think one of the trades that went wrong for us was actually oil industry. I think it was AMT. I did some research on it and, you know, oil is very very volatile right now, so we're in this whole situation with the global state and stuff. So we want to kind of stay away from oil industry trades, but we don't have that mechanism yet. But that's something that we'll add here shortly. Flute. Okay, so I guess that's interesting. It's interesting that this came first before that, and then it says that this clears, but it should be checking all of these guys. But anyways, okay. Like I said, new functionality that just went in place, thin volume. So it's like, why is it winning if it's thin volume, right? So we might have to do some manual work on this today. Let's try HON. Yeah, I mean, this is kind of all like, this is not my favorite. It's like when I see them jumping around like that a lot, it's not like, I mean, we do have a pretty solid channel. So, I mean, Bollinger Bands are wrapping it pretty well. So 50s on the RSI. We're pretty flat on the histogram. That's good. That's pointing way down. 24 is a little bit too low, to be honest. Let's see, HON. And, oh, Honeywell. So it said 22, right? Lots of volume. What did it give us? 220, 210, 252. Let's just find the DTEs and see if they match, actually. 220. Okay, let's build this. 21. Two 10 to 20. So this is 210. 220. And then what? 250, 260. So let's see where that puts our. Gosh, the screen is too small. So decent premium, actually. We got 12, we got good volume. We got 28, a little high for me, to be honest. But there's no volume here. So it did actually find the right volume, which is good. So it probably went to the 18 because that's closest to 20, and then it went down and found this guy, but that was like such a small delta because we go down to 15. We go, so it would have went 18 and then checked for volume, and then it would have went 15 and checked for volume, and those didn't pass, so then it started going upward. 23 no volume, 28 volume, and I think we go up to 30. It's a little high for me, to be honest, but let's see. So that's the what, put side. Oh, okay, I think we're actually safe on the put side. 220. Ooh, nah, I don't like that. I want to be like here. I want to be like 210. Let's see what, see if we go 210 there, and then 205. Nope, it's not. Then we can go 200. Yeah, 200 would work. So if we did 210, 200, I think that would actually be safer, and it's not going to be as much credit, that's for sure. But there is liquidity on that side. Yeah, it's like not a lot of credit at all. 128, 125 as it sits, so that's actually not terrible. I mean, obviously we want to be on the like the safer side of these trades. So I think that, oh wow, look at that volume, 11,000. The safer that we are, I think the more successful we're going to be, even if it's like smaller chunks of premium. I'm actually okay with that because we're only targeting like 2 to 3% growth per month. So like let's say your budget is 6,000, you know, we're looking at like, what is that? 660 times 3, $180 per month, like in growth. Like this trading account that I'm using right here, it happens to be a paper account with 200,000, so that's why we're doing like 10 contracts. But typically we would do one contract each. So, but you know, these small ones I think is actually okay because it does actually lend itself good to the 300, the $6,000 accounts. You know. Where were we? So 250. Where are we? 260, 250. This is I think the call side's actually okay. So 250 is way up here. Yes, I'm okay with that. Like that's super safe in my opinion because you're even up here. Here's this this resistance right here. So where's the 300? 300 below. So that makes me confident that saying that okay, the 300 below, or is it coming up? I think it's coming upward though. It is. I think we've got this. So this is the valley right here, actually. So I think we're gonna start creeping up here. Um, I still think it's okay because that's all-time high. It looks like, right? Where are you? No. Okay. Oh yeah. See, that's all-time high. Hey, good for the stock actually. Oh, Honeywell. Wow. Who knew? They must have got a new contract or something. So this is actually forming a little bowl right here. I think it's gonna come. It went down and it's gonna come back up. So it's gonna follow this 30, that shape, that 30, the 30-day. Yeah, I mean, if I had to guess, that's what I think it would do. You know, this big downward, a couple big movement here. You're like, oh, something happened here, and now they're like, okay, we're going good again. So it must have been a good contract that they got or something. So I feel like they're gonna come up, but I still think 250 is okay for 14 days. You know, like this is pretty shallow slope. So 54, that does say, let's see, it goes to like 68-ish. This is so small that it's not as accurate as I would like. So they've been up to 70 and like recently like in the 60s. Yeah, a little bit of a mixed signal, right? Because you would think that this would try to come back down a little bit, but who knows? Who knows? Who knows? I do like that the MAs are together. So this 90 with the 30 and the 7 are all kind of like in this area, which is nice. The Bollinger Bands do point upward a little bit, so that also tells me that we're kind of in an upward trend, slow upward trend. We got good mixed volume. We're actually we should be calming, which is, I hope that's the case. That makes it good for a trade. Okay, I'm not mad at this, to be honest. I do think we should go to the 210 200 on the put side, because that puts us right here and then all the way down here, which is, I think that's definitely safer. Let's see what she says. Let's just try to place this. I'm gonna place this best trade, and then what I'm gonna do after is, like, after the video, I'm gonna basically go through some of these other ones and see if I can find a better trade, to see if our scoring mechanism is being accurate or not. And then I'm also gonna have Claude look at this HON and see, number one, why is it not list? It should be listing all the ones that it checked, and then it should give me a list of the ones that it rejected. So that's kind of where we're at with that. Anyway, so let's place this and just, be done with that. 813. Okay, let's wiggle this. I like to just wiggle it just to update this guy again. So we're gonna go. I think I've been confusing her with the showing the review screen instead of the leg screen. Oops. And then send. We'll see how that does. So there. What was that? The put side? Put side. Not wider, farther, right? Yeah. OTM, lower deltas, more buffer. So now it's, before it was questioning it, now it's like explaining, yeah, that's a deliberate defensive tilt. So that's actually a better response than we had before. Confirm it's intentional, yep. Let's see if we filled. Not yet. 152, so we're okay. I think it's just gonna take a little bit. But our volume was good though, I think. So no volume here, but we do have the OI though. So those are huge. So it's going to be the put side that's going to struggle to fill, but it's always this farther one. Yeah, when you get like below like 0.1 deltas, it's usually harder to fill those. So I guess we'll see. That, that questions our exit strategy too, but I mean, a couple thousand OI, that's a decent amount. So we should be able to fill it. Just going to take some patience, I think. So let's let that ride. Yes, it was intentional. It has not filled yet. Oops. Okay. All right, so while that's filling, let's move on to asking Claude about this HON situation. I always try to be polite to the AIs because, you never know, one day they might own us. We just placed our daily. Come on, type right. Ugh. Are ready for the debrief. I actually have more time today because my battery, I got this extension so my microphone doesn't block my my charger plug anymore. So now I have full battery. It's actually probably going to notice the HON on its own. Um, 101, I can't remember. I just merged that this morning, so it should have been live. That's, let's see. Oh, that's log persistence. So it doesn't even, that doesn't even matter because that's for closing trades. Yeah. Oh, we're low. Let's see. We're gonna have to edit this. Yeah, so it knows. It knows that. See, Claude's much smarter because this is Opus. So that's why it's much easier to code with Claude because like Claude directly versus my Coda agent. So this guy is actually also a coding agent, but it uses Sonnet most of the time. So we up escalate to Sonnet, but it still has trouble with keeping everything in memory context. So directly inside Claude, it has its own memory context. So you can see like this right here. Um, it has a 1 meg memory context, so we can actually put all kinds of stuff in there, and it still keeps everything in its mind. Fix today. Should I tackle expiration diversification? Let's see what it actually said up here. Okay, let me close this because sometimes I don't really like that pop-up button or that pop-up box, and like it's just started doing that recently. It's like kind of annoying to be honest. Okay, here's the picture. No trade floor is live. And let the trade through. Best trade, first live day though. Oh, I see. So that's why. So because going into that trade floor step, let's go back here. So going into this trade floor step, it recognized that HON was already marked as the best trade. So maybe I want to see that here. I should probably see which one is marked best. But I think it happens after this output, actually. I don't know. But maybe it's possible. Oh, it does actually say, here's the best. So yeah, so it checks which one was the best. I see that's what it is. And then it allows it to go through. But the thing is, it doesn't make sense because we already have the best here and we allow it to go through, and then we're checking 8 finalists for events. So that doesn't really make any sense. So what we really want is, here's all these guys, filter them out by floor, then only the survivors do we do the event checks, And then out of those, that's when we pick the best. I think that's what we want. Finish flow was clean. Yeah, that's true. She held. Yep, that's true. Let me check this real quick. 140. Okay, we're still good on that. 7 positions, lone exception. Yeah. Okay, so I'm not sure what he's talking about with this expiration concentration. I think he's saying everything is like in the July 17th, but that's just the nature of when the options change naturally expire. So I don't think there's anything we're going to be able to do with that, because we're just in that gap of like everybody's still on this chain before they jump to the next chain. So it's going to be like that, I think. But what he's also saying here is that I keep widening my shorts, right? So he's like yesterday and today you both wanted you wanted a wider spread. So we've got that 165 issue logged in our books, in our project management system. So I think he's just basically saying like that's becoming a priority. So we need to look at that so that get that work done, and then we see is the system selecting the wider spreads that we really want. So this is also saying the July 17 issue, but like I said, that's not going to be able to get fixed. X-ray concentration guard. Yeah, I'm gonna disagree with Claude on this one because we're gonna have to discuss that one. Let's see, wider S2S. I agree that's the most important thing right now. And then he's asking, should I tackle expiration diversification? So then I'm gonna say wider. Actually, we can address the S2S issue as our primary focus today, but our new what is it? Composite floor filter. So let's kind of prepare what we want to say here. So we've got this step, we've got the change selection step that filters down to 8. We've got our chain selection step that filters down to 8 and already knows the best trade. Then we show our floor check on HON, best trade. Then we have survivors of the chain selection. We do the floor check on each of those, and then filter down to a smaller set of next. So what I'm explaining is that, oh, he's actually already working on some stuff, which is, I'm gonna actually interrupt. So basically I was explaining that, what we said. So I went basically this chain selection step filters down to 8, right? And then all of these 8 here, they have good good option chain selections. Then we should be filtering out all of those by our composite score, and then only do a deep event search on the survivors of that. So because these are expensive, like these actually, like these sometimes they take 30 seconds to a minute, because it's actually doing deeper like web search plus like social media and all this stuff. So it tries to come to find anything that it can with those specific tickers. The problem is that they're expensive. So this is like $8 right here. So it's probably like $1 each time we search. So we don't want the system to be like spending a lot of money like at will, right? So I mean, $1 is not a lot, but it's like, you know, it's still, it adds up over time. So we, you know, compared to like Haiku, that's like a 10,000th of a cent or something like that, or 10,000 of the dollar or whatever. So we want to be efficient with that. So hopefully like maybe the composite score check brings the 8 down to like 6, and then we only check the 6 for events. And then out of that we say, and that's another thing, like at this point, it already knows the best trade, or like, you know, maybe it's like, okay, at this point, this is the best, right? That's fine, but it should really only identify the best after we've already taken into consideration the deep event search. Because, yeah. And we're gonna have to tighten this up too. Like that's just a mess of, like, there's no reason for all of that information. Still not filling on this one. We're just gonna have to be patient on that. And again, like if it doesn't fill, then, you know, it is what it is, I guess. We'll have to log a no trade day. Good question. Let's see. I don't like how it covers like the actual conversation. And Claude is very verbose, right? So it's like, you want me to read all this, you know? Let me pause real quick. Okay, so basically what this is saying is like, it's agreeing that the flow that I outlined is probably better, and it does have one caveat, because right now the deep events check is not even filtering anything out, which is weird. Like I think when we built that, it was just kind of like, here, put this deep search in place, and then it doesn't even do anything. It just warns, you know, it just comes up with that warning. I'm actually gonna exit this, and I want to talk to him about this. Okay, so let me see. I don't need to put that. So what he's saying is basically, we need to change the structure so that it's chain selection that filters down to the 8 or 7, whatever it is, and then floor check is going to look filter that even further to, let's say, 6, call it, and then we do deep event search on those 6, and then anything that's like medium risk or higher, or maybe we can do 2 things. We can do filter out anything that's medium risk or higher, or we can filter out the highs and then flag the mediums, and then, you know, our selection set is either the lows, or if there's no lows, then the lowest medium, basically. So I think that's going to be the move. And then I'm going to actually tell him to, instead of right now, I think inside the selection chain, there's a mechanism that says, hey, this is the best trade. But I want the best trade to be an actual step. So all this filtration happens throughout the pipeline. There's probably like 12 steps in there now, to be honest. So like we filter, and then there's a step that says, okay, select the best trade. And that's what I want. So okay, so I'm gonna tell him that. I think the right approach. deep events. High risk and warn on medium risk. None of these steps should internally select a best trade. I'd like to have another whole step responsible making that decision. Also transferable to the other trade strategies. Okay, so I think that's explaining it right. Let's see what he says. I'm gonna have to set up Whisper so I can just talk to it, and that way it doesn't. We don't have these big pauses while me typing this, like just writing a little book here. Oh, actually, that's actually what he said. I didn't read this part. Final select best trade step. Yep. Yeah, so it basically called it. It was like, okay, that's what I want. Yep, here you go. So we're down to 8 in the chain selection. We're down to 5 in the floor check. Down to 4 in the events check, and then we have a best trade step. So yeah, I actually didn't even need to explain any of that because he already figured it out. So I think that's pretty much what we're going to discover for the day is like that new structure on the floor check. I think that's pretty good. I did have some other things to, yeah, crystal clear. I did have some other things to go over with Claude, but I'm probably going to save that for later. I'm not going to do another video tonight because we were able to do a little bit of a debrief today. And I think that's kind of enough to show that we found some issues and we're going to fix those. And then so tonight we're going to basically go fix this this floor check and then the new structure, and then we're also going to build this wider S to S. So tomorrow we'll be able to see those in action and see if the best trade ends up being, you know, too narrow, or, you know, if I have to widen it again, you know, stuff like that. So yeah, and we'll be able to see how that goes. Yeah, so if you wouldn't mind liking the video and subscribing, that way it just kind of like helps other people see this. And then if you have any questions or had any comments, anything that we missed, any type of analysis that you think we should be taking into consideration, all that feedback is very, very much appreciated. And I'll be watching comments and, you know, to respond to everybody if I can. So yeah, thanks for joining us. And yeah, that's it. So everybody have a good day. We'll see you guys on the next trade tomorrow.